Exploring product features in home loans. What are variable rates, and what are their pros and cons? Hi Andre. I've heard about variable rates, but I'm not entirely clear on what they are exactly, and what the advantages and drawbacks might be. Could you explain?
Absolutely, Mary. With a variable rate loan, the interest rate will fluctuate over the life of the loan in response to changes in market interest rates set by the Reserve Bank or by your lender. This means your repayments will fluctuate, potentially increasing or decreasing depending on prevailing market conditions.
That sounds a bit unpredictable. What are the advantages of choosing a variable rate loan?
One of the main advantages is flexibility. Variable rate loans often offer more features and flexibility than fixed rate loans, such as the ability to make extra repayments, access redraw facilities, or split your loan between fixed and variable portions. You may have the option to link an offset account with your variable rate loan, depending on the lender and the specific product you choose. This can provide greater control over your loan and potentially save you money in the long run. For instance, using the additional repayments or offset account features, often offered with some specific variable rate loan products, you can reduce the interest portion of your loan repayment. Consider this example. The loan amount is $500,000 with an interest rate of 6.3% and a loan term of 30 years. In this example, by making additional monthly repayments of $400, the estimated loan term reduces by 7 years and 10 months at that interest rate. In this specific case, by making extra repayments of $400 per month, this borrower was able to save over $185,000 over the life of the loan. This is because more of your standard loan repayment goes towards paying off the actual loan principal, thereby reducing the amount required for interest costs. Consequently, these extra repayments or offset savings can help you pay off your loan earlier than the agreed loan term.
Very interesting to learn this. The savings could be substantial. Flexibility does sound appealing. Are there any other pros to consider?
Another advantage is that variable rate loans may offer lower initial interest rates compared to fixed rate loans, particularly during periods of low interest rates. This means you could potentially benefit from lower repayments and overall interest costs, especially if interest rates remain stable or decrease over time.
Those are definitely compelling reasons to consider a variable rate loan. What about the downsides or risks associated with them?
Well, one downside is the uncertainty of future interest rate movements. Since variable rates can fluctuate, your repayments may increase if interest rates rise, potentially impacting your budget and cash flow. Additionally, variable rate loans may not offer the same level of stability and predictability as fixed rate loans, which could be a concern for some borrowers.
I can see how that uncertainty might be a drawback for some borrowers. Are there any other considerations I should keep in mind?
It's also essential to consider your risk tolerance and financial goals when choosing between fixed and variable rates. If you prefer the certainty and stability of fixed repayments, a fixed rate loan might be more suitable. However, if you're comfortable with some level of risk and value flexibility, a variable rate loan could be the right choice.
Thank you for explaining the pros and cons, Andre. It's given me a lot to think about in terms of deciding which type of loan structure aligns best with my financial goals.
You're welcome, Mary. It's essential to carefully consider your options and weigh the potential benefits and risks before making a decision. If you have any further questions or if you'd like to discuss other product features, feel free to reach out. We are here to help.